You know, gold and silver, for literally thousands of years, they've been the symbols of wealth, of security. But, and this is a big but, in today's crazy financial world, that beautiful shine, it might be hiding some pretty costly secrets. So let's peel back those layers and find out what's really going on.
I mean, there's just no denying it, right? That powerful, almost primal feeling of holding a physical piece of gold or silver in your hand, it feels, well, it feels real. It's tangible, it's permanent in a way that, some numbers on a screen just never will be. It's a real emotional connection to the idea of wealth.
And look, this isn't some niche feeling. It's super common. As chartered accountant Nitin Kaushik puts it, these metals they feel safe. They shine, they create this immediate sense of wealth. And really, that's the foundation. That's why so many of us are drawn to them as an investment. But here's the big question. Is that feeling telling us the whole story? And that brings us right to our first big topic, the hidden costs that come with actually owning the physical metal. This is where that warm, fuzzy, emotional appeal, well, it crashes right into cold, hard financial reality. So, what are we talking about here? What are these hidden costs? We're not talking about small stuff. We're talking about real, out-of-pocket expenses that go way beyond what you first pay for the metal. Okay, so there are three big ones we really need to get into. First up, something called the spread trap. Then, you've got the whole ongoing challenge of storage and safety. And third, something a lot of people just completely forget about, making sure what you bought is actually pure. All right, let's start with that spread. So what is it? It's basically the gap between the price a dealer sells you the metal for and the price they'll buy it back from you. Just think about this. You might buy a kilo of silver for, say, 1.22 lakh rupees. But if you tried to sell it back, like 5 minutes later, they might only offer you 1.18 lakh. Boom. That's an instant 4,000 rupee loss, just baked right into the deal from the very start. And believe me, the costs don't stop there. I mean, you have to keep this stuff somewhere safe, right? So now we're talking bank lockers or a serious home safe, plus insurance. These are costs that come back year after year, chipping away at any potential profit. And then there's this other thing, what Kaushik calls the peace of mind risk. And that's just a constant low-level worry in the back of your mind about it being lost or stolen. Okay, so we've talked about the costs of just holding the metal. But what about the value of the metal itself? There's this popular idea that it's a perfectly stable rock in a stormy financial sea. Well, that's another myth we really need to bust. Just take a look at this number. On one single afternoon, after hitting a record high by the way, silver prices absolutely crashed by almost 5%. We're not talking about a slow drift down over weeks or months. Nope, this happened in a matter of hours. So much for predictable stability, right? And let's translate that into actual money. What's the real-world impact of that drop? Well, that almost 5% move meant a loss of over 12,000 rupees for every single kilogram. So imagine you owned 10 kilos. You'd be down over a lakh rupees in just one afternoon. That is the kind of wild volatility that the simple safe haven story just kind of forgets to mention. Okay, so we've established that owning the physical metal has hidden costs and can be seriously volatile. So you're probably asking, what are the alternatives? Well, that brings us to the big showdown, physical bullion versus the modern financial products, what people often call paper, gold, or silver. So let's break down the choices here. With physical bullion, the big pro is obvious. You hold the actual asset in your hand. But the con is, you're paying for it with storage costs, dealer markups, and often higher taxes. Then you've got bullion ETFs. They're super easy and convenient to trade, like a stock. The catch? You don't actually own the metal and you can't ask for it to be delivered. And then there's a kind of middle ground, closed-end funds. These are also easy to trade, but they're often backed by specific allocated bars of bullion, and sometimes you can even redeem your shares for the physical metal. Plus, they might have better tax treatment. The trade-off, though, is that their share price can drift away from the actual value of the metal. Really, the key takeaway here is pretty simple. There's no perfect, one-size-fits-all option. Every single choice comes with its own set of trade-offs. And all of this, all these trade-offs, it all leads to what is maybe the most important question when you're investing in precious metals. And it's not what to buy, it's how you buy it. And to really understand why how you own it matters so much, you just have to look at the sheer scale of this market. Get this, over $30 billion worth of gold transactions are cleared on an average day, and that's just in the London market alone. This is not some simple little market of people trading coins back and forth. It's a massive, high-speed global financial system. And the way you choose to participate in that system, well, it has huge consequences for you as an investor. And that really brings us to the single most important takeaway from all of this. If you remember just one thing, let it be this. Yes, gold and silver can absolutely play a role in diversifying your portfolio, but how you own them, whether it's a physical bar in a safe, or shares in an ETF, or units in some kind of fund, that decision is arguably even more important than the decision to own them in the first place. So at the end of the day, it really all boils down to one simple question you have to ask yourself. Are you investing for the shine? For that feeling of weight in your hand and the emotional security that comes with it? Or are you focused purely on efficient, liquid, and cost-effective financial returns? Your answer to that question is going to tell you everything you need to know about the right way for you to invest in these metals.